Welcome, everybody. This is ERT News, where we give you everything that matters most at Elite Resource Team. Welcome again today, Tim Gacsy, Anton Anderson. Super excited to have you both here back today.
We are back.
We are back.
Back, baby.
It's exciting stuff. I know that we are highly anticipating what we're going to talk through today. Anton, before actually I get started here, I noticed a little something in
Oh,
the background there.
I wondered if that's why you pulled the screen back down. You want to do the full
Let's see
view
it.
for this? Yes, yes. Thank you very much, Jenna Wilson, for ordering this and the team. I have so much gratitude when I look at this now every day. The Inc. 5000, number 43 in the financial services company or industry. And you know what's really fun is the strategic the strategic partnerships. It didn't break, I promise.
Oh, geez.
At the strategic partnerships that are coming out of the woodworks, just to have some conversations with us that used to ignore us a couple years ago, but here we are. So I think it is going to impact everybody in a positive way in the community, and overall, very excited about it. And
Can't ignore us now. Can't
of
ignore us
course,
now.
of course, I know it's good stuff. Of course, we're back. ERT News, episode 9. It is tax planning season. So, Jenna, why don't you jump into today's topics and then I'll kind of frame out the tax planning discussion before we hand it over to Tim.
Love it. Love it. And I think everyone's been looking to see how we land this plane. Tim's been on the past two episodes. We've been getting everyone amped up for today. And I'm really excited for everyone to see what Tim is going to share. We're also going to talk about a Q4 tax planning one pager that you can give out to clients. We'll also talk through some things that are coming soon. So, Tim, great to have you back again. Excited to hear everything that you're going to share with the community here today.
And just to
Thank you.
frame it out before you share your screen, Tim, if you haven't watched the last two episodes, episode 7 or 8, I'd suggest you go back and do that because it will set the foundation of where the tax planning fits into the virtual family office fast track and overall how Tim, as the director of advanced planning in the VFO services, can really to help you to offer more advanced tax planning for your own clients. We're also starting to see some CPAs coming in and actually leveraging Tim in the VFO fast track as well, given his experience of 25 plus years. And what else would I say? Well, 9/15 was yesterday. That was a huge tax deadline. So we are now quickly getting into the heart of tax planning season. And if you are not talking with your clients yet about their tax planning concerns, you should be like start today. So we'll go through how we're offering the tax planning, positioning the tax planning discussion through this proposal presentation that Tim's going to share with you. And then, as Jenna said, we have a tax planning Q4 one pager to share as well. So Tim, let me kind of hand it to you, share your screen. I know you're excited to show some of the deck for the proposal meeting that we've created and maybe share some numbers as well.
Yeah, so before I get started, Anton, I know you talked about the deadline yesterday. There's another big deadline, October 15th coming up, but I know that's all just putting numbers for the previous tax year. But to be proactive for 2025, you also start blending in strategies and discussions with your clients. And there is some deadlines coming up, specifically the energy tax mitigation strategy with our specialists, the deadline September 30th. So that's a very viable strategy for a lot of folks, business owners, high net worth, high income W-2 folks as well. And this strategy essentially, for every dollar you invest in a strategy, you get about $1.30 to $1.40 back. So it's a very high ROI strategy. So, and not only can you utilize it for the current year, 2025, you could actually carry back 3 years as well. So definitely keep that in the front of your mind. And remember, the deadline for the energy tax mitigation is September 30th. So with that, I will move to the true topic of this discussion. And this is, I'm going to walk through today just to give a quick overview, the whole tax proactive planning process, right? Step 1 through 5, going to talk about that. And then actually show a real life example of a John Doe client for the actual steps in tax step 3. And that's part of this. This is the tax planning proposal, which is our front sheet of our presentation of tax step 3, which we present in front of the client and also the advisors included as well. So with that, let me flip to the next slide. So as you can see from this side, I know it looks pretty bare bones, but trust me, it does grow. Just like the map in the tax planning process, there's 2 phases, tax planning phase and then the tax solution implementation phase. So for tax planning step one, this is part of our map. This is when we do the original diagnostic and the client decides that tax planning is one of their top planning priorities. In this meeting, the client agrees to pay the $1,000 to cover work in tax step 2 and 3. The client also in this step gives us their assessment, their risk assessment, and their tolerance to the risks. And that helps us tune up what strategies we use. And we have a scale of our risk profile of 1 to 5. And that's a later meeting that Bridger and myself are going to do where we talk about the detailed levels of the risk.
Yeah, perfect. That's exactly what I was going to say. Is there's I think enough discussion just around the risk where when Tim references another meeting, we'll have him and Bridger on live on ERT News in the future to just specifically talk about the risk profiling of 1 to 5 and how we incorporate it.
Sounds good. And then for tax planning step 2, this is where we do the deeper dive. We look at the client's tax numbers, their history, their financial history, their personal history. We input tax returns into our tax planning software. We run their situation. We have a tax strategy model with multiple spreadsheets with the different strategies, just kind of timing and tuning and getting the best outcome for the client based on their risk profile. Okay. And then tax step 3, this is what we call our ROI meeting. And I'm going to go into a detail example here shortly. But in this meeting, we cover the potential tax savings, the ROI at a high level. And during this process, we also consider the risk profile when it comes to implementing these potential tax saving strategies. And then following our tax step 3, our ROI meeting, if the client decides to move forward, then we move into our tax step 4. This is what we call the educate phase. This is where we firm up on all the tax planning ideas and possibilities, the tax savings, the implementation costs. We arrange to meet with the tax specialists. We make sure the client, the CPA, the advisor, everybody is comfortable with the different tax strategies that we're recommending working with the tax specialist. Okay. And also, what we like the client to know is in this phase, they're in total control, right? They decide if they want to move on to step 4 and then ultimately to step 5. And if not, that's okay. We understand that as well. But regardless, we do offer a money back guarantee on the tax planning fee. So if the client's not satisfied with the detailed plan that we offer, we'll refund 100% of their investment prior to implementation phase. Okay, tax step 5. In this tax step, this is where the specialist will actually implement the strategy. And then also we're involved through the whole process as well. We're working with the specialist, the client, the advisor, the tax professional to take this to the goal line and ultimately see the savings on the tax return. Okay, so now I'm going to move into where we're at in tax step 3. This is the ROI meeting. This is the first meeting we have with the client to present our findings, right? Top level of the strategies, top level of the savings, and our projected ROI on our plan that we would like to eventually move to step 4 into step 5. So in this step, this is following our deep dive, our step 2 phase. We review all the personal and if necessary, their business returns, if they have a business. We simulate their liabilities, we look at their whole financial situation, and we compare it and analyze into our tax spreadsheet model. We analyze each of the 11 strategies that we have for our tax planning. So ultimately, for our tax step 3, we look to build a plan to maximize return on investment. So as we build out step 3, the plan to maximize ROI, we look at their whole aspect. We look at retirement planning, income shifting, increasing deductions, entity structuring, any type of loopholes, tax credits, etc. Again, the focus here is balancing savings with sustainability, and ultimately we want to reinforce that what you keep is what matters. So this is an actual example that I've built out. I changed some of the facts, but it's based on a client fact pattern. So in this particular example, we had a client, the family, 2 children, successful business operating as a S corp, and as you know, S corp flows through the 1040, and the 1040 they had for the current year, what we project is 100,000 of tax liability, and the past 3 years as well, roughly around 100K in tax liability. And I'll get to the specific details coming up on the strategies and savings, etc. But ultimately, in our estimated year 1 tax savings is roughly $225,000, with some of the savings that we plan to utilize to carry back to previous years to offset those tax liabilities. And then we also had tax-free income of 10K. Client investment is roughly $100,000 to specialist and a $25,000 VFO tax planning fee. So ultimately, all in, it's a $125,000 plan investment. So net year 1 savings after investment is roughly $100,000 with projected out 10-year savings of $820,000. But quick note on the tax planning fee, we do fix the fee in advance. We base this on projected savings, complexity of the strategies, the urgency, the risk, and the intangible benefits. All right.
And Tim, I know you're going to break this down a bit, but just in case anybody caught that the plan investment of 125 that he had listed there, that's not the planning fee. That's the fee, including the out-of-pocket cash flow that a client's going to have to invest in order to get that savings, right? So we'll break it down further on a subsequent slide, but just wanted to highlight that for those of you that caught that detail.
Yep. So we'll see here in a second the year one ROI, but for the year one tax strategy opportunities we focused on income, personal investment, and retirement strategies. Based on a risk profile, we added a retirement plan. We hired the 2 children that I mentioned earlier. We applied the Augusta rule. That's where a corporation, you rent your personal home to your corporation for tax-free income, and as well as tax savings from the corporate, it's a deduction from the corporate side. And then also we also implemented energy tax mitigation strategies too, which I know we said that tax savings for year one's 225, and you might be wondering, I said, oh, 100K tax liability was the average. So we plan to utilize some of that 225,000 and carry it back to previous years as well to offset those tax liabilities in the previous years. But specifically for the year one ROI, return on investment, the plan shows that we had potential tax savings of $225,000. We have a VFO services tax planning fee of 25,000, specialist fee of 100,000, which gives the client a net savings of $100,000. So if you take that net savings of 100K divided by the $125,000 cost of the tax planning fee and the specialist fee, that gives the client an 80% immediate ROI in the first year, which is phenomenal. So let me explain a little bit more on the slide. So you'll see we have the breakout of the VFO service tax planning fee. So in this case, the total tax planning fee is 25,000, but 1,000 was paid up front in step one. So therefore, the 24,000 remaining, we have 12K due, 12,000 due on the engagement letter signing, which will take us to step 4. And then if they decide to move to step 5 implementation, that's when the remaining 12,000 will be due.
Good stuff. And we don't need to go into a ton of detail on this one, but I do want to highlight, because that's one of the questions both advisors and accountants often ask is, how do you break up that payment? Do you always charge one time, or do you, do it in payments? So that's perfect, Tim. Let's go to the next slide.
All righty. So our plan doesn't end in year one. I like to take it out to 10 years. So it shows year 2 opportunities, but these could actually be applied past year 2 and beyond. And then we could assess if the client's needs change or their positioning changes, et cetera. But year 2, we looked at continuing the retirement plan, continuing keeping the children on payroll, continually to utilize the Augusta rule, but we also decided to add film financing, which it's the cinematic return strategy that we had. We also did a VFO specialist education webinar yesterday. So if you missed it, please tune back and watch the video on that. But we decided to add the film financing strategy because the client did expect his business to start growing in year 2 and beyond. So we want to add that because we could also increase the amount of capital investment in that strategy as well. But quickly, let's talk about the year 2 ROI that we saw, or that we're projecting. And so the year 2 plan shows potential tax savings of $130,000. The VFO services tax planning fee is 0. That was paid during year 1. Specialist fee to utilize the cinematic return strategy is 50,000. That gives a client a net savings of 80,000. So if you take the 80,000 divided by the $50,000 specialist investment, that gives the client 160% ROI in the second year. And also I'm projecting this, year 2 and beyond. So this is kind of the line in the sand right here, right? We like to show this visual. It gives it a one picture view of if you decide to do something and do a tax plan, or if you decide to do nothing, right? So you essentially have 2 options. You pay the IRS, or you implement the plan and keep more in your pocket. With no plan, the IRS keeps it. With the plan, you keep a meaningful portion of those dollars. So again, the choice is the client's. Hopefully, me personally as a tax person and a CPA, I think that the choice is clear. The client's going to move forward, but each person's different. And then this is our final step of the process. I believe we say congratulations, you're going to be moving to the next step. But again, everybody's different. But now, we've showed the client, we projected the savings, we show what's possible. We look then to move to the next steps, right? So next step would be signing the engagement letter, paying the 50% remaining. In this case would be the 12,000. That will take us into step 4. In step 4, we meet with the tax specialist, the client, this tax professional advisor. We finalize strategies, and then we decide if the client wants to move forward to step 5, which is implementation. Then we'll require the remaining $12,000 fee, which now is the total of the 25,000. And then in step 5, we move to implementation. We work with specialists, actually implementing the strategies, doing all the contemporaneous documentation, taking all the proper steps, so we actually could apply these to our tax return. And then we see the savings. And again, just as a reminder, we do have our satisfaction guarantee. We have 100% refund if the client isn't satisfied before implementation. So that's what I have. I know it's a little lengthy, but that's the step we take. And it's a great opportunity for the clients.
Yeah. No, I mean, it's it's such a valuable process for clients to go through. And I'm glad you touched on how we break up the payments, the satisfaction guarantee, the 5 steps of the tax planning, how we position the ROI, and include both the out-of-pocket investment to get it as well as the tax planning fee. I mean, a lot of good things touched on there. And many of you know we have a really good strategic relationship with Tax Plan IQ. One of the things that they share with us is that the biggest challenge that people using Tax Plan IQ have is actually what's on the screen in that blue box right there. So everything we just went through is a tax planning proposal. Client says, yes, we move forward. But unless there's actually implementation, meaning someone's holding the client's hands, they're communicating back and forth with the different VFO specialists and the tax planning strategies and making sure it gets done, the tax plan doesn't actually have any value for the client, right? It only has value because of the results that it creates. So the implementation there in the blue box is probably the most important step there is for those of us that are offering tax planning clients. So thank you very much for going through all of that, Tim. I really appreciate it. I'm excited to hear some of the questions and feedback from both the advisors and accountants who have a chance to do a deep dive on that. Jenna, what you got for us?
Love it. So powerful, Tim. Thank you so much. And just going directly into just some things that you can do right now, today, start talking to your clients about Q4 tax planning. We do have a deliverable. We'll put it in the comments so that you can take a look. But just nice one-pager. It's talking about all the tax saving opportunities that must be implemented before the end of 2025. Tim reviewed this. Tracy has gone through it. And I believe, Tim, on this upcoming Monday, the VFO specialist call, that you will be talking through some of this.
Yeah, I will. So September 22nd at 1 p.m. Eastern, I am doing a Q4 tax planning webinar. But yeah, I will discuss all these strategies because I think there's an opportunity for every client out there to utilize at least one of these strategies, if not multiple.
Love it. Sounds good. So definitely make sure you check out that Monday call with Tim. And then what else do we have coming up?
Landing the plane.
Anton is so pumped about this.
You know I'm excited about this one.
We jump on Skool. They have a new live streaming feature that I think is going to be a game changer for our communities. No more Zoom links to find. You go in the calendar in Skool, you jump on live, and we're all together. It's
a good continued evolution of the Skool platform. So you'll see that come in October. Just make sure if you have the Zoom links saved in your calendar that you plug into the new links in the communities.
Skool. Skool is so cool. Every
Cool.
time I just have it open, I'm like, this is all I need.
Skool's
All
cool.
right. Also coming soon. I know we chatted about this last week. Client-facing video and one-pager, still refining. We've seen the first previews. It is so good. So just let us get it perfect before we release it. But that is coming soon along with the one-pager. And then we'll also have some new specialists announced. Again, not finalized yet. So that just leaves us to our next episode, all coming soon. And we will be back with episode 10 before you know it. Thanks everyone for joining. Tim, thanks for being here. Anton, always good to see you. See you next time.
My pleasure. Always good to see you too. Thanks again, Tim. Thanks everyone. And leave us any feedback in the comments below. Let us know how you're liking these ERT news episodes.